The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. 2025 is the year in which the US dollar is expected to perform strongly once again after posting gains in 2024. Market focus early in the year will be on the incoming Trump administration and its policies that are widely expected to not only boost growth but also add to price pressure. That will underpin US Treasury yields and boost dollar demand. So how far can the US dollar go this year? Well, to find out more, joining me now is Sim Moh Siong, who is a currency strategist at the Bank of Singapore. Moh Siong, welcome to the show.
Thanks, Hongbin. I'm glad to be back to the show.
I'm glad to have you on again. Moh Siong, 2024 was a strong year for the USD. How did the greenback fare overall, and what factors strengthened the US dollar in the past year?
Well, the greenback appreciated in 2024, as you pointed out. Well, there are a few factors behind it. One is the resilient U.S. growth that has dampened expectations of a Fed rate cut, and that has lifted the dollar towards the end of 2024.
I see. Well, could we see the same theme moving the U.S. dollar this year as well?
I think we can certainly see the theme of the resilient U.S. growth lifting or supporting the dollar somewhat. But then again, that theme has played out a long way. But the changes in policy under the Trump presidency could drive the dollar up further in the next few months.
Okay. So, Moh Siong, how much further can the U.S. dollar go this year then? Can we see a peak in the USD this year?
Well, I think the dollar can go a bit higher in the next few months. I mean, our view is that euro-dollar could test parity, and the Chinese currency weakness could overshoot to 7.5 yuan to the dollar in the next few months, especially if Trump carries out his threat in terms of imposing further tariffs on Chinese goods.
Right. Well, Moh Siong, the Fed started cutting rates back in September, bringing total cuts in 2024 to 100 basis points. But markets have reduced their expectations for U.S. monetary policy easing. How might a hawkish Fed risk impact the U.S. dollar going forward?
The hawkish Fed risk, I think, is now better reflected in the dollar. The market is now expecting only slightly less than 25 basis point rate cuts by the Fed for the rest of the year, which is fair against the signs of a resilient but still gradually slowing U.S. jobs market.
I see. Well, at the same time, we've got Trump's administration coming in later this month. How will tariff threats impact the greenback?
The tariffs, I think, overall would be supportive of the greenback. The trade uncertainty could hurt growth outside the U.S., and therefore the tariff risk could continue to keep the dollar supported in the early stages of Trump 2.0.
I see. How might a stronger USD for 2025 then impact regional currencies then? Which currencies will be largely impacted here?
Well, I think within the region, the obvious currency that could be impacted the most would be the Chinese currency. The tariff risk has fueled greater Chinese currency depreciation pressure. And but at the same time, we expect the Chinese central bank to continue to restrain the Chinese currency weakness before allowing bigger adjustments once the tariff risk materializes. So the further Chinese currency weakening could weigh on other Asian currencies.
I see. Well, what about the Sing dollar here? Will the Sing dollar remain resilient against the USD this year?
Well, I think the ranking for the Sing dollar has fallen relative to its Asian peers, partly because of concerns about the tariff risk impacting the region. And given that Singapore is a highly open economy, it could come under greater impact if the tariff risks are materialized, even if it's not directly impacted in terms of the Singapore itself, given that Singapore runs a trade surplus with the U.S.
I see. Well, moving forward, are there any USD pairs that investors should take a closer look at this year?
I think the yen is interesting. The yen has weakened alongside the rising U.S. yields. But the Bank of Japan, as a lone hiker in the world of other central banks cutting that should help limit the Japanese yen weakness.
Okay. So do you think that the Japanese yen will further weaken this year as well?
I think the Japanese yen will not be immune to the strong dollar backdrop, but the extent of the weakness should be limited by the prospects of further Bank of Japan tightening and also intervention risk.
I see. Well, with expectations of a stronger dollar, how might investors tap into the currency market then? Should those holding on to the greenback continue to hold on to them, and could now be the time to buy into the US dollar? What are some strategies FX traders could consider, Moh Siong?
Yeah, I think with the dollar set to stay stronger for longer, the investors should maintain some US dollar exposure as part of a diversified portfolio.
I see. With that, what are some of the risks then investors should take note of?
I think the risk here is that we could see a peak in the dollar, but probably only later in the year. The dollar's lofty valuation, meaning the dollar is not cheap because it has strengthened quite a long way, and that lofty valuation might become problematic if doubts over the endurance of the U.S. economic exceptionalism grows. Or it could turn problematic if concerns over a more dovish successor to Powell when his term as the Fed chair expires in May 2026.
I see. Well, Moh Siong, if the US dollar does indeed peak this year, would it, completely spiral down, or will the downfall be a bit gradual?
I think it really depends. And it really depends in terms of the economic scenario. We do expect the dollar to be supported in the near term, but a turn in the dollar lower could happen if the U.S. economy shows more signs of slowdown later in the year than we expect.
I see. And before we let you go here, Moh Siong, anything else you'll be looking out in the next couple of weeks that could move currency markets?
Well, I think the U.S. data right now is front and center. The CPI data next week will be important in terms of gauging the Fed rate cut expectations from here. Also, Trump will be inaugurated as a president on 20th of January, and we'll need to pay close attention to what he does once he becomes president. And at the end of this month, on the 29th of January, we have the FOMC meeting. The market is expecting the FOMC to pause, and we'll have to see what they say then regarding their overall take of the U.S. economy.
I see. Well, thank you so much, Moh Siong, for your time and your insights today.
Thank you, Hongbin.
Thank you. That was Sim Moh Siong, who's a currency strategist at the Bank of Singapore. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.